Today, we are looking at a development in the Vietnamese currency market that may be interesting to Iraqi Dinar followers, particularly because both the Vietnamese dong and Iraqi Dinar are frequently discussed in conversations about exchange rate policy, currency management, and future economic reform. The latest data shows that the USD-VND exchange rate rose to 26,075.000 on the 13th of August, 2026, representing an increase of 0.08% from the previous trading session. At the same time, the Vietnamese dong has strengthened by approximately 0.71% over the past month and is up around 0.72% over the last 12 months. At first glance, a move of just 0.08% may appear relatively small, and in the context of the global foreign exchange market, it is. Currency markets regularly experience daily fluctuations of this size due to changes in supply and demand, interest rate expectations, trade flows, capital movements, and broader movements in the US dollar. Therefore, this single-day move should not be interpreted as evidence of a dramatic currency transformation. What makes the data more interesting is the broader trend. The reported monthly and 12-month performance suggests that the Vietnamese dong has experienced a modest strengthening trend against the US dollar, rather than simply reacting to one isolated trading session. For Iraqi Dinar followers, the important question is not whether the Vietnamese dong's movement directly changes the value of the Iraqi Dinar. It does not. The Iraqi Dinar and Vietnamese dong operate under different monetary systems, different economic conditions, and different policy frameworks. Iraq's exchange rate decisions are determined by Iraqi monetary authorities and the country's broader fiscal, banking, trade, and economic circumstances. Vietnam's currency policy is managed by Vietnamese authorities according to Vietnam's own economic priorities. So, there is no automatic mechanism through which a stronger dong causes the dinar to strengthen. However, the Vietnamese example can still provide useful context for understanding how currencies can evolve over time. Vietnam has built a highly export-oriented economy with substantial manufacturing activity, strong international trade connections, and significant foreign investment. Its currency is managed within a broader monetary framework that allows authorities to respond to economic conditions while attempting to maintain stability. This is an important distinction because currency strength is rarely determined by one factor alone. Economic productivity, exports, reserves, inflation, interest rates, investor confidence, capital flows, and central bank policy can all influence exchange rates. That broader lesson is relevant when examining the Iraqi dinar. Many discussions surrounding the IQD focus almost entirely on the possibility of a future exchange rate adjustment. But a sustainable change in the value of a currency would normally have to be supported by economic fundamentals and credible monetary policy. Iraq has important economic advantages, particularly its large energy sector and natural resource base, but it also faces challenges involving diversification, banking sector development, fiscal dependence on oil revenues, private sector growth, and integration with the international financial system. The latest Vietnamese data therefore gives us an opportunity to separate two very different concepts, a normal market movement and a structural currency revaluation. The reported 0.08% increase in USD/VND is a normal exchange rate movement. The fact that the dong is reported to have strengthened over 1 month and 1 year provides a little more information about the direction of the currency, but even that should not be confused with a formal revaluation. A genuine policy-driven revaluation would involve an explicit decision by monetary authorities and would be communicated through official channels. This distinction is especially important for Iraqi dinar viewers, because online currency discussions frequently mix market movements with speculation about future policy announcements. A currency can strengthen gradually without receiving a dramatic new official rate. Likewise, a central bank can change its exchange rate framework without that change necessarily producing the enormous gains sometimes predicted on social media. Responsible analysis requires looking at the actual policy framework, official statements, economic data, and financial market conditions, rather than assuming that one country's currency movement predicts another country's future. In the short term, the Vietnamese data suggests that the dong is continuing to experience relatively modest changes rather than an extreme disruption. For investors, importers, exporters, and businesses operating in Vietnam, even relatively small exchange rate movements can matter because they affect the local currency cost of imports, the competitiveness of exports, and the value of foreign currency revenues. A stronger domestic currency can reduce the local currency cost of imported goods and commodities, while a weaker currency can provide advantages to exporters by making their products comparatively less expensive in foreign markets. Iraq faces some of these same basic economic trade-offs, although its economic structure is very different. Iraq is heavily influenced by oil exports, meaning movements in global energy prices and foreign currency revenues can have an important effect on government finances and external balances. This makes Iraq's exchange rate environment particularly sensitive to fiscal policy and the country's ability to manage foreign exchange flows effectively. Banking reforms and improvements in financial infrastructure can also play an important role because a modern economy requires reliable payment systems, transparent banking practices, and confidence in domestic financial institutions. For the Iraqi dinar, therefore, the more meaningful long-term indicators are not necessarily what another emerging market currency does on a particular day. Instead, viewers should watch Iraq's own fundamentals. That includes the Central Bank of Iraq's official exchange rate policy, inflation developments, foreign exchange reserves, money supply trends, banking sector reforms, government finances, oil revenues, international trade, and progress towards stronger integration with global financial standards. Another important factor is confidence. Exchange rates are influenced not only by physical currency supply and demand, but also by expectations. If businesses and households have confidence in a country's financial institutions and monetary policy, they are more likely to use the domestic banking system and hold financial assets in the local currency. If confidence is weaker, people may prefer foreign currency or physical cash. That behavior can influence the demand for domestic currency and the effectiveness of monetary policy. This is one reason banking sector reform is such an important part of any serious Iraqi dinar analysis. Even if Iraq has substantial natural resources and foreign exchange earnings, a stronger and more efficient financial system is necessary to translate those economic resources into sustainable financial stability. Improvements in electronic payments, compliance standards, banking supervision, transparency, and international connectivity can all contribute to a healthier financial environment over the long term. The Vietnamese example also highlights another important point. Currency performance should be measured over meaningful time periods. A single day's movement can be noisy. A one-month trend can provide additional context, while a 12-month trend can reveal whether a currency has generally strengthened or weakened. Even then, however, performance does not guarantee what will happen next. Exchange rates are forward-looking and can change quickly when economic conditions shift. For Iraqi dinar followers, this means today's Vietnamese dong data should be viewed as an economic comparison rather than a prediction for the IQD. The dongs reported 0.71% monthly strengthening and 0.72% annual strengthening, demonstrate that relatively modest currency movements can accumulate over time. But Iraq would need its own combination of monetary stability, economic growth, fiscal discipline, financial sector development, and investor confidence to support any lasting change in the dinar's value. Looking ahead, the most important question for the Iraqi dinar is whether Iraq can continue strengthening its economic and financial infrastructure. If banking reforms advance, government finances become more resilient, non-oil sectors expand, and confidence in the domestic financial system improves, those developments could create a stronger foundation for monetary stability. That does not automatically mean a specific future exchange rate, but it does create conditions in which monetary policy can operate more effectively. In the near term, viewers should remain focused on official Iraqi sources, rather than unofficial claims of guaranteed exchange rate changes. Watch for formal Central Bank of Iraq announcements, government budget decisions, banking reforms, inflation figures, reserve data, and credible international economic assessments. These indicators are much more useful than isolated social media predictions or comparisons with currencies, such as the Vietnamese dong. The latest USD VND figure of 26,075.0000, together with the reported monthly and annual strengthening of the dong, is therefore best understood as a modest but interesting development in Vietnam's currency market. It shows how exchange rates can move gradually as economic conditions and market expectations change. For Iraqi dinar followers, the broader lesson is that sustainable currency performance comes from economic fundamentals and credible policy, not simply from speculation about a dramatic overnight change. As we continue monitoring the Iraqi dinar, the focus should remain on evidence, currency reform, exchange rate policy, banking modernization, fiscal management, and economic diversification are all developments worth watching. If Iraq makes measurable progress in these areas, the financial landscape could become stronger over time. But until official policy changes are announced, any specific prediction about a future IQD exchange rate remains speculation. Thank you for watching Iraqi Dinar News. If you found this analysis useful, make sure to subscribe to the channel and like the video so you can stay informed about important developments involving the Iraqi dinar, Iraq's economy, and the global currency market. We will continue to focus on responsible, factual, and balanced financial information, rather than unrealistic promises or guaranteed predictions. Remember, this content is provided for informational and educational purposes only and is not financial advice. Always conduct your own research and consider consulting a qualified financial professional before making any financial decision.